Okay, so Bitcoin is trading at $88,600. And I want to do an update, a follow-up after yesterday's big sell-off and liquidation event. So if you watched my video yesterday, I basically made that video at around $92,000 Bitcoin, where we're saying we're probably going to break down, everything looks bearish. Now, yesterday, what ended up happening is we ended up selling off to almost $86,000. So that was almost a $6,000 drop. And it was quite a big one. I think a lot of people got liquidated yesterday, and it's pretty ugly. As you can see here, what happened is that we ended up breaking down below this range. So we got above here in November. We had a huge run up after Trump got elected as the president of the US. We had this big run in November where we went all the way up to $108,000. And since basically the end of November, this has held as support, this $92,000 to $88,000. And that has kind of been the level that has been holding the support. Now, yesterday, for the first time, we ended up breaking below there. And like I said, in technical analysis, the more times that the price tests a level as support like this, eventually it's just going to break down. And that is what we had yesterday. So now the question is this the end of the crypto bull market? Is this a fake out? Is this a bear trap? Are we about to go a bunch lower or not? So I wanted to share in this video update my thoughts on some things because both options are actually on the table. Now, as you can see on this chart over here, we have this volume profile, which basically shows you what we already know, that there is no historic support basically between where we are now at 88 and about $70,000, because that is where we broke through on the election or after the election in November, where we went on this massive rally. And basically besides that massive pump up, which was new all-time highs at the time, there's nothing else here to support it. So we are at risk here of a complete breakdown potentially to $70,000. Now the question, as always, is what is going to happen? And it also depends a lot on both buyers and sellers, because ultimately that is what makes the price do what it does. Price goes down because there are more sellers than buyers. Price goes up because there's more buyers than sellers. So at this point in time, if there is a lack of buying pressure and there is an excess of selling pressure, then we could see a complete drop. If we see whales or institutions or people that own a lot of Bitcoin start selling now at market, you can see there's no support, and we could drop into the 70,000s pretty quickly. But at the same time, if there is nobody that's going to be selling in big orders, and actually, in fact, whales or exchanges or institutions or even retail, if there's enough buying pressure and they can push it back above the breakdown point, so above 92,000 again, then potentially we could still be looking at this being a deviation. We swept the lows, and both options are here on the table, where we might actually end up getting back above here, and then it gets interesting again. That's basically the two scenarios, and that's how you have to approach trading, investing, price action. There's always two possible scenarios. There's levels of invalidation, there's if then. So right now we are at risk of a bearish breakdown, but if we can reclaim this $92,000, this breakdown point, then things start to get interesting, especially if we get a daily close back above here. That's always important, because in the short term you can see these wicks on lower time frames, on hourly, on 4 hourly, but only a wick above here and then back down is bearish. But if we get a daily close back above 92,000, then things start to get interesting again. So you can see how to approach this in a better way. Obviously, if this starts going lower, if there's no reclaim of 92,000, in the short term, this is bearish. Okay, so we're leaning bearish until we get above 92,000, and then things can start to change again, and then we can start to favor more of a bullish scenario, where as long as we get continuation and don't go back below where the price was yesterday, then things start to be more bullish. Okay, so that is how I'm seeing Bitcoin right now. But what I want to show you specifically now is altcoins, because the altcoin charts yesterday, what happened on that liquidation event, start to look potentially a lot more bullish than Bitcoin is actually looking. And of course, the altcoins are going to depend on what Bitcoin is going to do. So if Bitcoin is going to continue to break down and go into the 70,000s, anything I'm about to say about altcoins is obviously invalidated, because if Bitcoin drops another $10,000, altcoins are all going to drop. But if Bitcoin holds up here, and especially also if it can reclaim that 92,000, look at things like this. Okay, so let me show you. First of all, let's take a look at Ethereum. Okay, and we're looking here on the daily chart specifically because that is what's important. We're not looking at low time frame stuff here. We're looking specifically on the daily chart here at Ethereum. You can already see that this candle yesterday was just another big wick down. In the same way, we had this massive wick over here all the way back up. We had a bunch of consolidation. We dropped, and what's interesting to see here is if I put this Fibonacci retracement from the low to the high, it basically retested the Fibonacci golden pocket here, which could potentially be bullish here if this ends up being a low again. What we're seeing here technically is that this level over here also is perfectly respected, so we had another wick down. So what we could potentially say here, and again, this all depends very much if Bitcoin is going to hold up or not, but assuming that Bitcoin holds up, it is possible that we do bottom here and that we might potentially run back up. Now, for the real bullish scenario, we need to get back above the breakdown point in the same way with Bitcoin. So we need to get back above at least, I'd say, call it $2,900 Ethereum. And at that point, we could start to consider that maybe this is indeed bullish. So in the short term, in the medium term, we are still bearish here, but get back above here, and there is potential here for this upside. So again, we're always looking at multiple scenarios, and we're never stuck to, for example, a single bias where we believe it's going down only or we believe it's going up only. So many factors play a role, whether you're looking at the daily time frame, at the shorter time frames, if you're looking at intraday trading, if you're trading with leverage, if you're trading with spot or investing with spot, all of those things make a massive difference. So if we're looking at Solana, for example, it's back at $140, which is basically a 50% drop since the high a couple weeks back. But you can see this channel that I shared also yesterday, this range that we have, it's dropped exactly to the middle of the range. And if you look at yesterday's candle also here, the daily candle, this could potentially be a low here. And of course, the caveat is basically, or the invalidation is that it can't go below yesterday's low. That's it. That's really as simple as it is. So if this is a bottom and we see some sort of reversion back up, or a bounce from the middle of the range, which is completely possible after this 50% drop. Okay, we had the bearish RSI divergence here at these tops. We had the high sweep, and as you can see, this is a 50% drop where you can clearly see 54%. That's a big drop in a matter of literally like 5-6 weeks. Okay, so we had this drop all the way down. I think we got a lot of people that were liquidated, and right now what we could look at is potentially just taking longs on these altcoins over here with the assumption that the low is in, so we shouldn't really get much below the low. We put basically a stop below the low, and even if we're just targeting back to 200, that's a 1 to 4 risk reward, which in terms of a trade, if you're approaching it from that perspective where you're risking 1% to make 4%, that's usually a pretty good setup. So basically, there are a lot of charts that all look like this. If we're looking at XRP, we have a similar situation here. We have a range setup that played out very nicely. So we had the high, we had a higher high, and then we had a bearish RSI divergence here on the daily, which, as you can see, played out perfectly. It swept the range low, despite it just being a wick, but that's fine. On the intraday, on the lower time frames, it took out these lows, as you can see, so perfectly technical objective. We bounced, and now we made this specific candle that looks like this over here. I'm pretty sure if we put a fib retracement on here, look at this, a perfect retest of the Fibonacci golden pocket. So what we can say is, and nobody knows the future for sure, okay? It's all about probabilities. I'm just reiterating that for anyone who's not a professional trader, who always thinks, you flip your bias every day, that kind of stuff. Yes, The charts change every day, and you have to be flexible enough to adapt. Some days we go long, some days we go short. Can even in the same day change depending on what the price action does. That is how you trade. That is how you make money as a trader. You have to be able to be flexible. And again, it depends on your strategy. If you're trading a monthly time frame or a weekly time frame, you're not going to change your bias every 2 hours. But if you're trading intraday and you're looking at the hourly time frame, you can change your bias multiple times a day. If you're trading on a 15-minute chart, you can take 3-4 trades a day in the same direction or in opposite directions. You can be long in the morning, you can be short at night. That is how it goes, okay? That's what's involved with trading. But I'm showing you here the daily time frames. So that's probably the most relevant to most of you watching here, because I assume a lot of people are just longer term investing or not even trading specifically, but just invested with spot. So even with spot here, if this is the lows, then we could have a setup over here where the low is potentially in. So we don't want to see it go below yesterday's lows. If this was the bottom yesterday, if this is a bullish retest here of the Fibonacci golden pocket, our invalidation is basically just below yesterday's lows. It shouldn't get back there if that is the bottom. And maybe this continues higher. Maybe it goes for a third high over here, which means a run back up to, say, 370 or whatever. Maybe it goes even higher than that. But you can see this is a risk reward of 1 to 6, meaning if you were to risk as a trade 1%, so you're risking and you're calculating that at the point of the stop loss just below yesterday's low, you would lose 1% of your trading account or your bankroll or your risk capital, whatever you want to call it. But if you're right and this does end up playing out, you make 6%. And that is a very good risk reward when it comes to trading and investing, because it basically means that even if you're wrong 80% of the time with setups like this, 1 to 6, you're still profitable, which is pretty insane. Okay, so that is XRP. We can also look at DOGE. It's another one of the big ones. You can see here what is very interesting in terms of the daily candle. Look at this. What we had here is we had a sweep of this wick just ever so slightly below it, and this very potentially as a daily candle could just end up being a complete reversal candle and bottom candle over here, especially as it really just did a complete retest here after the highs of the Fib 0.70%, the golden pocket over here. So first what we had is we had a retest here of this wick. The first time we bounced, and now we just swept it ever so slightly, but it is a potential second retest here and a potential low, where again it's possible to take a trade here where your stop is just below the previous low, but below yesterday's low, because if this is the bottom, I doubt we get below there. You can put it a little bit more below it just to be safe, and you can see if it were to run back, not even to the all-time high, even just to this level over here, 40 cents, it was already 48 cents, but let's say 40 cents, you're looking at a 1 to almost 8 risk reward, which is again a very, very profitable setup. So what I would say is that at this point in time, depending on Bitcoin, that is the ultimate decision factor here, or the ultimate main factor in all of this, what I've just said, is as long as Bitcoin holds up and doesn't sell off more, it is possible that the altcoins have bottomed and that we could see a run up. The invalidation is very simple. Yesterday's low should be the low or slightly below it. It shouldn't get below there. If prices drop below yesterday's low, then this whole theory and everything I said in this video is probably invalidated, and we might just end up going a whole lot lower. If Bitcoin especially can get back above 92,000 with a daily close, that probably increases the odds of altcoins indeed having bottomed and us potentially seeing a bullish run up, maybe for the next several weeks, because keep in mind, historically, March and April are still seasonally bullish, so we do still have that window. It is also still part of the 12-month post-halving cycle. 12 months after the halving would be middle of April, so there is maybe a teeny tiny chance that the bottom is in here. Based on how things look right now at this point in time as I'm recording the video, I would say there is a chance. Again, I've given you the invalidation levels. It depends on Bitcoin. If Bitcoin doesn't break down, it's good, and if prices don't go below yesterday's low, then we are potentially looking at that. So again, it's not financial advice. I'm just sharing my thoughts here on the chart. Make your own decisions. If you do trade, make sure to always manage your risk. Make sure that you know what you are prepared to lose if your stops get hit, and usually that should be 1 to 2% of your bankroll. Maybe if you want to take some shots, you can risk 5% on a trade, but again, you don't want to be going all in on this. You don't want to get ruined on a single trade or wipe out your whole account, etc., etc. If you do want to trade on Bluefin Exchange, use my link in the description down below. It's where I personally trade. I do a lot of giveaways, hold a lot of competitions, and if you sign up through my link, then you will be eligible to partake in all of that. Thanks for watching. Smash the like button. I will see you in the next video.